The phenomenon of significant gold price increases in Indonesia. The impact of the U.S.-China trade war. In recent years, Indonesia has witnessed a significant rise in gold prices, a trend that has caught the attention of both investors and consumers alike. While various global and domestic factors contribute to this rise, one of the key global events that has played a crucial role is the ongoing trade war between the United States and China. The tension between these two economic giants has had far-reaching effects on global financial markets, including the price of gold. Understanding how the U.S.-China trade war intertwines with the increase in gold prices can offer a clearer picture of the economic landscape in Indonesia. Global factors influencing gold prices. The U.S.-China trade war and economic uncertainty. The trade war between the United States and China, which began in 2018, caused a significant amount of uncertainty in global financial markets. The imposition of tariffs and trade barriers between the two largest economies in the world created ripples in global supply chains, impacting everything from the cost of raw materials to consumer goods. In response to this uncertainty, many investors turn to gold as a safe haven asset, increasing demand and driving prices upward. For Indonesia, a country with deep economic ties to both the U.S. and China, the effects were especially pronounced. The trade war contributed to global market instability, influencing foreign exchange rates and adding pressure on the Indonesian rupiah, IDR. As the rupiah weakened due to the global uncertainty triggered by the trade war, the cost of importing gold increased, further elevating gold prices in Indonesia. Currency depreciation and global inflationary pressures. The U.S.-China trade conflict led to fluctuations in global currency markets. As the trade war escalated, investors sought out more stable currencies like the U.S. dollar, driving up its value. In contrast, emerging market currencies, including the Indonesian rupiah, suffered depreciation. This decline in the value of the rupiah meant that gold, often priced in U.S. dollars, became more expensive for Indonesian buyers. Additionally, the trade war fueled concerns about global inflation. Tariffs imposed on goods between the U.S. and China led to price increases for various products, contributing to global inflationary pressures. As a result, investors looked to gold as a hedge against inflation, pushing up its price in international markets. The rising price of gold, coupled with a weakened rupiah, directly impacted the price of gold in Indonesia. Global economic slowdown and low interest rates. The trade war between the U.S. and China also had a detrimental effect on global economic growth. As both nations imposed tariffs on each other's goods, global trade slowed, affecting many economies, including Indonesia's. In response to the slowdown, central banks around the world, including the Federal Reserve in the United States, lowered interest rates in an attempt to stimulate economic activity. Lower interest rates decrease the opportunity cost of holding gold, as investors earn less from bonds and other interest-bearing assets. As a result, more investors turn to gold as a store of value, pushing demand and prices higher. In Indonesia, this global trend led to an increase in gold prices as local investors, seeking stability, flocked to gold-backed investments. Domestic factors in Indonesia. Amplifying the gold price surge. Increased domestic demand for gold. Indonesia has long viewed gold as a symbol of wealth and security, and this perception has only strengthened in recent years. With rising inflation and an uncertain economic outlook due in part to global factors such as the U.S.-China trade war, more Indonesians have turned to gold as a way to protect their savings. As local demand increases, prices are driven up. Gold as an investment vehicle in times of volatility. During times of economic uncertainty, such as the period marked by the U.S.-China trade war, Indonesians increasingly seek safer investment options. Gold, known for its relative stability compared to stocks or bonds, has seen a surge in popularity as an investment. The rise in demand for gold-based investment products, such as gold savings accounts and gold certificates, has contributed to the upward pressure on gold prices. Impact of government policies. The Indonesian government has also played a role in shaping gold prices. Import taxes and regulations affecting the trade of gold influence its availability and cost in the country. In times of economic instability, these measures can exacerbate price increases, as they further reduce the supply of gold available in the market. The broader economic implications of rising gold. Prices in Indonesia. Consumer impact. As the price of gold continues to rise, it affects consumers who use gold for personal or investment purposes. Jewelry, often a major purchase for Indonesian households, becomes more expensive, reducing accessibility for some. The increased cost of gold also affects those who save wealth in gold, making it more difficult for people to accumulate significant amounts. Economic impact. For Indonesia, the surge in gold prices comes with both opportunities and challenges. On the one hand, gold mining companies may benefit from higher prices, contributing to the nation's economy. However, as gold prices rise, it can also drive inflation, affecting everyday goods and services. The trade war's impact on global supply chains and inflationary pressures contributes to an overall economic slowdown, which is compounded by rising gold prices. Impact on the financial sector. The Indonesian financial sector, particularly in terms of gold-backed financial products, experiences both a boost in demand and the challenge of navigating price volatility. Banks and other financial institutions offering gold investment services must manage the increasing interest in such products, while also addressing the risks posed by fluctuating gold prices. Conclusion. The significant rise in gold prices in Indonesia is not only a reflection of domestic demand and economic conditions, but also a result of broader global dynamics, particularly the trade war between the United States and China. The trade war's economic repercussions, including currency depreciation, inflation, and global uncertainty, have led to increased demand for gold as a safe haven asset, thereby pushing prices higher. While gold offers opportunities for investment, the rise in its price also poses challenges for consumers and the economy at large. Understanding these interconnected global and domestic factors is essential for navigating Indonesia's evolving economic landscape.